So hi guys, welcome back to today's video. I know that November is a very volatile month with a lot of events going on. Let's say in the US, there's the US election, and then there in Malaysia, there are things like where we'll be announcing the GDP and also the budget for 2021, as well as the political instability that we have in Malaysia, which we never know what's going to happen. So if you're looking to venture into the stock market, or if you're beginning to venture into investing, here are a few factors that I would hope that you all will consider before stepping into the market or before deciding on what stocks to buy for November and December. So I will also be making future videos to talk about the stocks that I think is good for you to buy in, let's say, a certain in December, or let's say before 2021. So do stay tuned for that upcoming video. So after my experience of trading and investing in Malaysia and the US, I think that in volatile periods, things that you should really consider is firstly, which stocks do you want to invest in? Like, what is the country of and region of the stocks that you're familiar with? So let's say if you think that you are unfamiliar with the companies and what are the business model of the stocks in the US, just because that the return is high, you shouldn't just venture into it aimlessly if you don't know what the company is doing. So let's say you are only familiar with Malaysia companies, do just stick to investing into Malaysian companies because it's something that you're definitely more familiar with and you really know, okay, what product are they selling? What is their competitive advantage they have over their competitors? Are they doing well? Like, do you see their products being taken off the shelf? Are people really using their services and products? Whereas, let's say in the US, if you're unfamiliar with the company, you won't be able to physically see what's going on in the country as well. So definitely do stick to what you're familiar with. So similarly, there are also different stocks across the world, like in the Singapore, in Australia, in China, in Hong Kong. So there's no one best country for you to invest in. It really depends on which country you're familiar with and what are the companies going. What are you familiar with? What's going through with these companies? So another thing that you have to take note, other than the familiarity, is the time zone. Because let's say we are in Malaysia, if you want to invest in US stocks, the market that you will be able to monitor the stocks will be our night time till our early morning, which is not something that we're able to monitor throughout the night if we have a full-time job the next day, because it's just not feasible to do that. Whereas if, let's say, if you want to invest in a Singapore stock where it's the same time zone as Malaysia, it's definitely a lot more convenient and a lot easier for you to do your research and for you to monitor the market. However, for long-term investing, usually the time zone is less of a hindrance because you don't really have to look at the market every day. It's more of, are you keeping up with the news? Is there any major change in the fundamentals of the company? And things like that. So it's only really a hindrance if you're planning to do trading in the stock of that country, where you really want to monitor what's going on in the market. The third thing that you want to also keep in mind is that there's the currency exchange. So let's say you're investing in a US stock. So either you transfer through your bank, there will also be an exchange rate difference, or let's say even if you directly transfer to the broker or whatsoever, there are also different sorts of exchange rates. So definitely there will be that fluctuation there that you have to take note of. But also if you're long-term investing and you are just putting money in every month, that negligible currency difference really doesn't matter because you're not looking to consistently put money in and take money out all the time. You're just looking to really invest for a long-term horizon of 5 to 10 years or more. So you just hope to let the money grow, and then eventually it comes to a day where you can live off this amount of money. So I hope that we all don't invest into the company and then just keep selling and then taking the money out to use, because then it's just really a little pointless. So the next factor that you have to consider will be your investing principles. So for example, do you want to be an investor or do you want to be a trader? So investors, there are also things like, do you want to be a value investor or do you want to be a growth investor? As for trading, there are also different sorts of trading principles out there. Do you want to do momentum trading, swing trading, or day trading? So these are things that you have to consider before really going into the stock market, because it will ultimately affect the kind of stocks that you want to buy and the kind of things that you do on a daily basis that will affect your buying and selling decisions. So let's say, for example, if you're a long-term investor, be it a value or growth investor, I would recommend that you go with dollar cost averaging. So don't try to time the market and just buy at 1 month throughout the year. Instead, you put money in every month and really just consistently keep buying the stock that you think has good fundamentals and have a good growth rate. in the next 5 to 10 years. The only difference is maybe, let's say, if you are more of a value investor, then you would buy more good, consistent, huge blue chip stocks. Whereas if, let's say, you're a growth investor, maybe you look for an industry or certain companies that are going to be profitable in the next 5-10 years, although it might not be so good now. So for example, let's say if you invest in the renewable energy sector, the electric vehicle sector, these industries are things that, although might not be huge now, it has a huge potential to bloom and flourish in the next 5 to 10 years. Whereas for, let's say, if you're a trader, you would pay more attention to technical analysis, such as breakouts, trend lines, and what are the indicators that you're looking at, how's the volume and turnover of the company. I will go into more in-depth details of these fundamental analysis and technical analysis in future videos, so do stay tuned for them. And another main reason why I think it's important to really know your trading principles is because, let's say you are a long-term investor. Usually when you buy, you won't really set a stop loss to the stock, because unless the fundamentals of the stock change, you will just be looking to consistently add on and buy more stocks. Whereas let's say if you're a trader and the buying decision is no longer there, let's say you buy because it is following the trend line, and if it goes below the trend line, then there is just no point to hold on to the stock. Instead, you should cut your losses and leave. But a lot of people, why they end up losing a lot of money is because when they go into the trade thinking that, okay, I'm a short-term trader, I'm going to base my buying and selling decisions on this reason, for example. Then when it goes against this reason, most people will think, okay, I'm not willing to accept my loss and accept my mistake. So what I'm going to do is I'm going to transition into a long-term investor. I'm going to hold the stock and then wait for it to come back. I mean, if the stock is good, yes, you might be lucky to eventually it will recover maybe in weeks, months, let's say years. But if you look back at certain examples, there are stocks where after 10 years, it still hasn't recovered to the point where you bought it then. So if so, what's the point of keeping that money stuck there and suffer and incur deeper losses? So essentially, people who will lose a lot in the stock market is because they don't adhere to their buying and selling decisions and they are not willing to admit their mistakes. So the third factor to consider is the broker that you need. Because let's say if you're investing in US stocks, you wouldn't be using the same broker as you are as using Malaysian stocks. So personally for me, when I'm trading in Malaysia, I trade based on a platform called TA Securities. Whereas let's say I trade in the US and invest in the US, I use this platform called Tiger Securities. So different platforms have different benefits and that will suit different preferences. Because let's say if you are using a platform like eToro for US stocks, although it's cheaper and the transaction fees, the deposit and withdrawal fees are lower than other platforms, they may not have all the stocks that is available out there, and they may not be as comprehensive as, for example, they may not have this certain stock in the London Stock Exchange, they may not have this certain stock in the Singapore Stock Exchange, for example. And if you're looking to invest or trade in those markets, you have to really look into, okay, does this broker offer the things I want? Does this broker offer the fees that I'm comfortable with? So all these are things that you have to take into account. I will also be making future videos to share about my reviews on all the platforms that I have used, so that you are able to listen to what I have been through and how's my experience on using it, and then to see if it suits your personality and your investing and trading principles. And if it does, then you can go ahead and begin using that platform. Then the fourth thing that you want to look at is, how do you want to diversify your portfolio? Do you want to diversify based on your industry, based on the risk, based on the different kind of, maybe you want to have half that is value stocks, half that is growth stocks. So do you want to diversify into, let's say, REITs? Do you want to diversify into bonds, cryptocurrencies? So all these are things that you have to plan out before you start, because then you can actively manage your portfolio every month, every quarter, every week, to make sure that, okay, it's still balanced and the portfolio is diverse as the way I want it to, and I'm not incurring extra risks that will affect my daily life. Because at the end of the day, investing is to help us achieve financial freedom and not to affect our daily life when we worry too much. Oh, is the stock going to drop too much? Am I not being able to accept the risk that's coming along with this loss? So instead of focusing so much about worrying about your investments, really just stick to your risk that you're able to tolerate, and then just consistently invest every month, and eventually you'll reach to a point of time where you will grow your portfolio, where you will really be able to generate you with good returns. Then the last factor that you want to consider is, do you want to leverage your funds? Do you want to venture into other derivatives like options and futures. So these are more technical and more advanced jargons and methods that I won't recommend a beginner to use. But if let's say you have been in the stock market for a few months, for years, and let's say you come from a financial background and you really think that you're prepared to venture into this, definitely it's a good thing to think about, like how do you want to leverage your funds? How do you want to hedge your portfolio through options, through futures? Do you want to generate more return through that? And I will also create future videos to talk about these derivatives, to really explain and break it down to you all to how to begin, let's say, gaining a higher return using options and futures. How do I hedge my current portfolio using options and futures? And what are the risks and rewards and benefits and drawbacks of these things? So it's definitely too much to be covered in one video. So I'll break it down into smaller different parts for future videos, so that it won't be one long video and you all can just take your time to really just watch through the different smaller segments of the videos. So I hope that everyone continue to have a good investing journey throughout the month of November, and I wish everyone best of luck. And with that being said, we have come to the end of the video. Please do leave a like down below and share this with other friends who you feel will be helpful. And leave a comment down below what are the things you look out for before investing, and if there are any comments you have for this video. So I hope you all enjoyed this video, and thank you all for watching. See you all in the next video. Bye bye.